The firm I'm with is Abraham Investment Management. Before we start, there's always the disclaimer that I think is appropriate that needs to be presented. Always, especially with the NFA here. I'd like to give you a little background on myself and our firm. I am a new author. I have a book coming out with Wiley Books called The Bible of Trend Following: How Professional Traders Compound Wealth and Manage Risk, as well as, obviously, I'm a CTA. And this is going to be part of my discussion. There's 10 basic premises that I really believe make a successful investor and a successful CTA. And I'm going to discuss two of them because we don't have that much time. And primarily, I develop strategies, and I'll say this humbly for myself and my family, on ways to compound money. I started 18 years ago. I sold a business that I started in college. And I approached my accountant, and I said, what do I do with this money? And I asked him if he could recommend, he has a pretty nice-sized firm, who is his most successful client that invests? Because I always have surrounded myself with the smartest people, and I always try to. And he put me in touch with a person, gave me a name and a phone number, and he says, I don't know exactly what he does, but he makes money, and he trades futures. He trades all kinds of things, but call him, just talk to him. So I called him with the expectation that he was a money manager, that he was, let's say, went to Wharton, or he was Goldman Sachs, something to that caliber. As a matter of shock, he was a dentist. And he started in 1979 doing a simple strategy, trend following. And now go back and think about it. In 1979, what is happening? 1979, we don't have the computers that we have today, or even 1994. So what he did, if I want to fast forward his story, which is going to be part of my presentation, is he took $200,000 with just a basic concept and then ran it up to $18 million. He compounded this money. We all know what compounding is, but I really feel not everybody in this room really grasps the power of compounding. I've learned the compounding of money through him as my mentor, and also, thank God, I was also allocated to Monroe Trout, in which I compounded money. I also put money in with Julian Robertson that was this so-called guru. And I put money in 1994, 1998, he blew up. So I learned there's no gurus, no magic systems, no magic managers, no magic anything. Besides allocating, I was doing my own trading. I probably made, and I'll say this humbly, every mistake possible. It made it all. Even though I had people helping me along the way. I had this dentist who helped me. I have another colleague who had started in 1977 trend following and trading. I still made every mistake, but from all those mistakes, I improved my trading. The goal of our discussion is, there's 2 points. I want to talk about the psychology of winning, what it really takes investing in, even if it's a good CTA. And again, the idea of compounding money. I keep on saying compounding money, not to beleaguer the point. These are issues that I've instilled in my children. My children, when my daughter turned 12, we have this thing, it's called bat mitzvah, and they get money. To teach her the value of money, she's been trading since she's been 12 years old. And actually, she tells me that she's going to work with me. And she attended CTA Expo in Chicago. She goes, I just turned 18. I'm ready. I'm going to see what this is all about. So we took a trip, and we went to Chicago. So the idea of compounding isn't this inane concept, which I'm going to elaborate a little bit more on. I said there's 10 principles that I've learned over the last 18 years. We're going to talk about 2 of them that I think will make you a better investor. Investing are pieces of the puzzle, almost similar to what Mr. Schneider said this morning from Shinnecock. I'm going to say on something else. It's tough. It's really tough. He accentuated a couple points. How much money was made over a 10-year period in the S&Ps, over a 15-year period, and a 5-year period. Also look at, you can take the same analogies to CTAs. It's been a tough 2009. 2010 was pretty good. 2011, not so great, right? I mean, ever you guys been investing in CTAs? So far this year, 2012 isn't the greatest. But it's not about, what did you do for me last month? What is your Sharpe ratio? It's much more than that. There's three obvious elements of successful investing. Clearly, the methodology. And there's no one methodology that's perfect. That methodology has to fit your personality. That methodology could be, if you're a value investor, you could be a trend follower. And if you like selling options, which I wouldn't, but everyone has their, what their methodology is. But then the next thing that really becomes so paramount, which is so shocking, is the risk and the money management that so-called professionals, or I'll call wannabes, some get, very few get, because I've sat exactly where you guys have sat. I've also been allocating to CTAs. A very few that what I feel get it, that understand it. Then you have these RBs and wannabes. The wannabes don't understand risk. They don't understand leverage. They over-leverage. Look what happened to long-term capital. Look what happened to Amernav. Then you have guys that even have flawed systems based on risk, where they risk too much, or they're counter-trend. That one trade, like Dighton, blew them up.
Dighton on what, Amron?
No, Dighton was in 2011 where he went short the Swiss franc, even though he ended up being right. But you can be right until you blow up.
Right.
Almost like, if you want to say, the MF Global trade,
Yeah.
or the JP Morgan. There's guys that overtrade. In my interpretation, everything that I've learned over the last 18 years, it really boils down to a couple ideas. You have to manage the leverage. You have to manage the risk. It's risk per trade. I have several questions when I talk to a manager. What is your risk per trade? What's your risk per sector? What's your open trade equity risk? Those are simple questions. A lot of guys can't answer that. You need not just a good methodology. You need not just risk management. What you need, and part of what my book is coming out is talking about, it's called The Psychology of Winning. And it sounds trite. It sounds trite saying compounding. Everyone knows compounding. But we're going to jump ahead and we're going to talk about that a little bit more. One of the things I've learned, psychology of winning. The only certainty in what we're doing is one word. Anybody have the guess? Uncertainty. That's the only thing that's certain. And the question is, what steps you're going to do to protect yourself or your clients and keep you in this game in order that you can compound money? What's going to give you the confidence to stay with a manager? Because it's tough. I don't care what manager you're going to allocate to. You're going to have periods. You're going to have drawdowns, obviously. What's even worse is you're going to have these periods that nothing happens. They're going to happen more often than you like. I would tell you, in my experience, 70-80% of the time, nothing happens. The other issue, anything can happen. Anything will happen. How many people expected MF Global? How many people thought the NASDAQ could fall where it fell? These outliers, you need to be prepared for. And even professionals don't prepare for them. I was having a nice conversation with Shane, and I told him a conversation. I'm laughing. My wife wanted to come and hear my speech, and I guess I'm glad that she didn't make it yet. She's probably going to walk in the door as I say this. My wife tells me something. She goes, you're obsessive, compulsive, and paranoid. I say, thank you.
Why do I sign?
Well, amongst other attributes. But you have to believe in this business. Anything can happen. Anything will happen. And when you really believe that, you build your systems for that. You stress test them. I'm putting my family's money next to your money. My money's online. I compare trading to sports. I love sports. Sports are competitive. Investing is competitive. I said that trading is tough. And the reality is, think about this. I'm sure in England everyone loves soccer, right? I mean, that's just, and in the States everyone loves football or baseball. How many times during a soccer match are there scores? Most of the time nothing happens. The ball goes back and forth and back and forth. Football, the same thing. Nothing happens. But you win the game. Guess what? In the fourth quarter, there's a touchdown, or there's a field goal, or there's something. So why do people tell me, how'd you do last month? To me, it's a lifetime strategy. I'm going to be doing this for the next, God willing, 30 years, maybe 40 years if I live this long. And that's the mentality. And the other thing is when you play sports or in life, there's rules. If I pick up the soccer ball and I pick it up with my hands and I throw it in the goal, I broke the rules. I'm not going to win. It's the same thing. There's rules when we trade. I have a story, quick story, that I have a neighbor talking about soccer. He's 17 years old. He loves playing soccer. I wake up in the morning, 5 o'clock in the morning, so I can trade the Chicago exchanges. I'm up, and I'm doing my stuff, and I love it. And all of a sudden, when I first came in, we moved 6 years ago. I'm thinking, what the heck is this? This 17-year-old, actually wasn't 17 then, he's been playing soccer. He's kicking the ball in the net. He makes it look so easy before he goes to school. I go to bed. My kids tell me I'm not cool. I'll go to bed. 9:30, 10 o'clock at night. The ball's going into the net. This kid, he's obsessed with soccer. He wants to win. It's his passion. And the reality is, I compare him to other kids that want to play soccer. He puts his everything into it. Probably practices more than 120 hours a week. And to me, I think he will become this soccer superstar that he wants to be because he puts in the time and he puts in the passion and the love of the game. And it's like everything in life, like sports and trading, you have wannabes and you have Arbies. It's the same thing when I'm sitting across from you, and I look at managers. Some of the managers tell the greatest story. And I guess I'm from Missouri, even though I'm from Missouri. I don't believe anything. I don't trust anything. So I'm like, take it with a grain of salt. But there's CTAs that want to make the money, but then don't put the time into the work. I mean, going on the obsession, like said by my wife, I have a pad and paper next to my bed. I dream weird things. I dream of trading systems. I dream of trading ideas. I write them down. In the middle of the night, 3 o'clock in the morning, I write them down. And then after my trading, I'll go walk on the beach, because we live right on the beach, or I'll go work out. And then I'm start knocking it out, I'm start figuring it out. And also, I'm blessed that I have a programmer who is obsessed with trading programs, algorithmic trading programs, as I am. He's been doing this for years. He loves it. He doesn't have a hobby. I don't know if I have a hobby. I mean, I love doing this. And compare that to other CTAs. And I've sat where you've sat. Let me jump to the next. I mentioned the goal of my conversation with you, 2 aspects. The psychology of winning, which we're going to get to, and the other is compounding. The power of compounding, I mean, I'm sure you've heard the phrase from Albert Einstein, it's one of the mathematical wonders of the world. That's why I've instilled in my children, at 12 and 13, even though they probably think I'm an obsessive parent, what is compounding? If you take $100,000 and you can generate 15% returns, let's say over 10 years, you 4 times it. 8 years, 15 times it. You keep on doing that math. When my kids are 30 and 40 years old, you're talking exceptional wealth. The way to avoid this exceptional wealth that I've seen many allocators to CTAs not get. When the managers have a drawdown, they bail. If they have a flat period, they bail. They're not going to get to the goal. They're not going to be able to compound money. I'm doing my work, obviously, for my family and my children, and have instilled in them the power of compounding. I mentioned the dentist, and now I'm going to get back to him. This isn't really him. This is comical. My daughter helped me put my PowerPoint presentation together, and she thought it was pretty funny, and it kind of make a smirk or two or chuckle. But the reality is, when you look at, and I say, passion, and I mentioned long-term capital. You have PhDs. These are real PhD that you get a degree. Then you have a PhD, which I say, passionate, hungry, and driven. You have that with or I've been lucky to surround myself with those kind of people that are PhDs, but passionate, hungry, and driven, but in a different context than the traditional PhD. And I compare, let's say, the dentist, or there's a handful of guys that really get it. There's a guy named Harry from Houston. Anyone knows who I'm talking about? Not saying his last name, Harry Kloss. Fantastic, fantastic. He gets it from 1987. He knows what it takes to stay in this game. There's an Alan in Chicago, an Alan Gold. He gets it. The dentist gets it. My message to you is I want to instill in you what I've learned and what I get. The fact is, it's not easy. It's really, really tough. And the thing with the dentist, what really, let's say, makes me feel good, when I started in 1994, I said, wow, he's a dentist. If he can do this, I can do this. And I've passed that along to my children and to their friends. My daughter, she, again, I'm talking about her so much, but I mean, she is obsessed as much as I'm obsessed with this. She loves it. She wants to go study in Singapore to grow the business. The idea is like this. The dentist gave me the power of belief. This chart. How many of you guys would invest in this chart? What does it look like? Any interpretations? Is that good, bad? Okay, let me show the next.
It looks like a fund I put an investment.
It looks like a?
It looks like one of the funds I have an investment in. Yeah.
Well, you're going to laugh when you see who it is. This is 13.56 from 1991. Look at the drawdown here. Look at this drawdown.
That was in 08.
08.
Yeah.
Look at this period. Nothing happens. Nothing happens. Guess what? You didn't even take it out to 2008 highs. You ready? It's Warren Buffett, BPRA. Berkshire Hathaway. The reality is, in my interpretation, that most people don't have a goal. They don't know where they're going. They don't even have a plan. They have no idea. They'll run after numbers. They'll run after gurus. I want to share with you, as I said, I've done several things. I've sat where you've sat, and I've done investments. And sometimes luck is better than brains. I stumbled upon a firm in Florida that also my accountant suggested I find. This is a proprietary account. I think it's written in black, but it's not showing, but it's a proprietary account. And I consider this a world-class idea. It was run by a firm. It's not my results, which I can send you, or they're on my website. It was a firm in Florida that ran algorithmic trading systems on behalf of customers, an IB. And I would say that they were as good as it gets. They were experts in the field. They knew what had a propensity to work in real time with real money as opposed to what was in theory. And these are a real account. They met with a lot of developers, and they'd ask questions to the developers. They'd ask a myriad of questions, like you guys, I assume, ask the people that you invest with. They ask, okay, you have this algorithmic system, and you're showing me these great numbers, great. Well, what markets do you trade? And sometimes the markets they hear, they say thank you and goodbye. They hear rough rice, propane, and they just say thank you. Or they'll ask another simple question. What kind of commission rates did you figure out in there? Or what type of slippage rate did you find? Or did you put into your algorithms? And then they say thank you, goodbye. So these guys, they were, I don't want to say the guru because I don't believe in gurus, but they had a really great idea what stood the possibility of worked versus in theory, and then what worked in reality. These guys, they recently sold their firm, and I use them also as a mentor or as a sounding board. They helped me, because my work has always been an enhancement over the years from 1994, and the program I work with, the programmer, to get to where I'm at. But what is really the point? Here's a world-class system. I think it's pretty amazing. But also understand this. This is no fees, there's no management fees or incentive fees or anything like this. They made their money with commissions. But these are real numbers. But the fact is, how hard is this? How many of you, first glance, you say 19.75? Wow, sign me up. I'm ready. Let's go. Chase numbers. But I'm going to show you how hard this really was. And I invested in this too. Here's the first chunk. How really, what did I write here? How really easy it wasn't. Here's a chunk. Everyone likes buying the new highs, unfortunately. And then all of a sudden, nothing happens. Almost a year. What are you thinking? What are your clients saying? What'd you put me into? How come I'm not making money last month? I didn't make any money. So you have these flat periods. It gets worse. This period, you had a great run up and a great run down. This real-time, I'd say world-class trading idea, dropped from 370 to 270,000. How many people would still stay in this? How many would you stay in it? Not that many, unfortunately. And I'll tell you one of the reasons is because it probably wasn't explained to you when you go into a CTA. No one has ever explained to me as a client the idea of compounding money. No one's explained to me the drawdowns and why there's going to be drawdowns and what to anticipate. So the question is, it's like, let's go to another one. There's a lot of these that make it look, it's that one, tough. All of this period. Nothing happens. But what's happening in the real world? Stock markets are plummeting. Real estate is plummeting. The world's burning. What are you thinking? Would you keep your money with this guy? Or, it's just like, probably not. And here's a superior program. That's what I'm talking about again. I want to accentuate the point. The psychology of winning. I don't care which manager you go to. There's periods that the only way you're going to make money if markets move. Markets have to move up or down. They have to do something. And if they don't, I don't care if it's, the swing trading, pattern recognition, trend following, you're not going to make money. And that's the reality. 70, 80% of the time, nothing happens. You have these long periods that nothing happens. But you have to keep your eye on the ball, like in soccer or football. What is your goal? What is the goal? You're not going to make a score every time when you're trading. You're not going to make a score every time when you're kicking a football. Here's another long period of nothing until the firm got sold. And then again, to go back to that chart, 19.75, which is pretty awesome, which probably comes down to about 15%-ish, give or take, after fees and management fee, incentive fees and management fees, which there's a handful of CTAs that can do this. Again, what Alan Schneider, I think is his first name? No. He made a brilliant point. I'm not sure how many people picked up on it. He said that 5 years is the lifetime of the average CTA. Why? Again, the psychology of winning. It's not just you have this great system or great methodology or you have risk management. It also boils down to putting on every trade. There's guys that I talk to that they'll second guess themselves. They'll second guess their systems. You got to believe in it. The investors have to believe in the manager. Summation, because I think we're moving a little bit quick. What I believe and what I've seen, that again, investing is really tough. Sports are really tough. Even with the right principles, the right risk management, the right system or methodologies, in order to be successful, you need the right mindset. You need that patience and discipline to get through some of those ugly periods that are inevitable, regardless of any manager. I have one colleague that had a fund, he just left them. He was a manager in Singapore, that he took them from 100 million to 2.5 billion or 2.4 billion. And he told me, he said, you know what? I didn't get it. Institutional investors did the wrong thing. Every time we made new highs, they throw us money. It's not the way to do it. The idea, what I've done, is I invest in, let's say, managers that are obsessed like me as far as risk and drawdowns. I buy their drawdowns. I know what it likes to be patient. You need to be patient. You need to know what is the goal. This is not a goal just for you guys, it's for your children. Let your children compound money to this astronomical numbers just by staying in the game. I know it sounds trite. People say, oh, it's compounding money. Albert Einstein, he brought it out. The psychology of winning. How many people have been to a presentation that they said, I haven't said one thing about my trading hardly, which I invite you to come and talk to me afterwards, or I'll come to your offices. I'm here tomorrow. Because without those key points, you're not going to succeed. I don't care if it's me, or I'm sure there's a handful of other people in here that are making their presentation that get it. But the idea, and that's what my book is about. I wrote the book for my children, and then my daughter has given it to her friends, and then it got published with Wiley. It's getting published with Wiley Books, because the idea is it's not enough. It's not enough to have a good system or a good methodology or good risk management. You need to have what I believe is the psychology of winning. I've talked about 2 pieces of the puzzle. There's more. There's 10. I invite you to come, contact me. Let me put my contact details on here. I'd love to chat with you more and tell you everything about my methodology. Nothing is hidden. And I thank you for your time and your attention. I timed it.
Yeah, that's good.
Whoops. And it's also time for the Asian markets almost. Let me I have some business cards if anyone wants business cards.
Andrew, did you give me one? You did give me one.
Here, please. Thank you.
No, I didn't get one.
Oh, okay. Have everybody else's?
Can I grab one as well?
Yep, let me just hit this. Let me turn this off.
Oh,